The other angles that can be considered is individuals and or families that are open to or willing to relocate can perhaps become non-UK resident and then dispose of their shares in a UK trading company. Now, fine, it's a UK trading company, but disposing of your shares as a non-UK resident, now this doesn't work with properties, so don't get too many ideas, but disposing of your shares in your UK trading company as a non-UK resident effectively again means potentially 0% capital gains tax. This is something that can be explored. This is something that I personally advise on. So through Aswat Tax, which is our specialist tax advisory practice, but also through Aswat Global, where we assist. In terms of jurisdictions, people are going all over the place. So you have Jersey, Italy, they have a decent regime, Portugal, different parts of Europe. Some people are just going back to their homeland. But the UAE and the GCC region is a fast or a rapidly growing and expanding region in terms of opportunities. And then also, you have the sunshine, which you cannot go wrong. I'm actually shooting this video in Dubai, if you can see behind me. You have the tax-free environment, the safety, no crime compared to the UK. Again, it's a stark difference along with the sunshine. So people are exploring the UAE, the Kingdom of Saudi Arabia. Again, I'm very heavily involved with the Kingdom of Saudi Arabia and the opportunities that are there. And we set up, company formations, corporate tax, and then international tax advisory and structuring as well. So that's something you can discuss. You can discuss with me. But that's the tax planning point, which is those that are willing to relocate should dispose of their shares post relocation. And again, this is a very specific area: statutory residency test, split year treatment, temporary non-residence rules. This all needs to be looked at. My expertise and my technical knowledge and capabilities are around multiple taxes. We are a multidisciplinary practice, and this is what makes us stand out, where we can have a case and we can look at different angles. As in, you can discuss one particular case and I can talk about so many different taxes. Okay, this is something that I constantly develop myself in. The other planning point, or the final planning point around business asset disposal relief, is for your information. So FYI, the increase in the rates from 10% to 18%, 20% to 24% was on budget day. So those that completed on budget day, unfortunately, they lost out. Yes, tax advisors, ourselves, looking at MBOs, sale to third parties, EOTs, prior to budget day, we were extremely busy. I honestly believe that we'll be even more busier. Corporate finance specialists as well will be even more busier up until the 5th of April. Why? Because the advice there is to expedite the sale process. So I've already had many discussions. We've engaged for 2 clients as well in terms of expediting the sales process prior to 5th of April 2025, where the business asset disposal relief rate will go up to 14%. So that 4% saving is still significant. Now, there are many angles we can look at this, and I always like to take a well-rounded approach. For example, you have to run the numbers. You have to crunch the numbers. So what is the tax saving? What can we do? What can't we do? What are your plans for the future? Is there potential scope to improve certain efficiencies? So this is where the business advisory comes in. Is there certain scope to improve business efficiencies so that, okay, let's just say you're going to make a £40,000 tax saving. Is there anything else we can look at that will rather increase your sales value by 5%? So, there's a lot of angles that need to be considered. But from a tax perspective, one may wish to expedite the sales process. We are on hand. We are a firm of chartered tax advisors. So there's myself, CTA, my colleague CTA, FCCA, ATT. We've dealt with M&A transactions. So please reach out.